Okay, let me get this straight. Bond market sold off, what, almost half a point, 3/4 of a point before the Fed minutes even came out. And then, obviously, you guys know what happened from there. We kept breaking. Trend is your friend. Don't fight the trend. I did try to buy that first dip against what I thought was an old pretty good support level. That got stopped out pretty fast. And then we had another level of support down at 137.15 in the bonds and caught that bounce off of there, at least to try and save some of the day. Now what? Going forward, that 137.15 area was an interesting support area. Possible fifth wave equal to the first wave off of the old highs back from the beginning of May. Use it as a pivot. Same level in the 10-year was 127.16 plus. We went through that obviously by a lot and then came back. So I'm going to use that as a pivot area too. And now we should get a bounce. I'm keeping a close eye on the equities markets. 5 waves down from this morning's highs in the equities bodes for more selling. Key support at 16.17, so we want to watch that. And I think if equities can start to accelerate on the downside, we might find some buyers coming back into treasuries, but the move has to be fast. I don't think a kind of slow grind lower in equities is going to provide any buying for treasuries at this point. I don't know, they threw the baby out with the bathwater today. I look at my screen and everything is red except for natural gas, which is up 1/2 cent. Nice job, Ben. I think this could just be the beginning, or actually just a continuation of the recent volatility that we've seen here. I don't think this kind of stuff's going to stop. I wouldn't be surprised to see a nice bounce from here in the treasuries, but I also wouldn't be surprised to see lower lows. You know, the big range that the bonds have been in for the last year and a half, 135 to 153. Back to 135 maybe. Retest those old fourth wave lows. But, you know, right now we're going to keep a shorter term viewpoint, stay nimble. I just, posted in the chat room and kind of look for a bit of a bounce here in the treasuries, and let's see if we can get back over some of these old lows. The old low in the 10-year was 128.03 and the old low in the bonds was 138.25. It's a long way to go, but we could see, a good bounce here, especially if these equities keep working their way south here. So again, I'm going to try and stay nimble here. I think we get a better, bounce first from these levels where we're at. Bonds are down 2 points. I could see us bounce back towards, maybe that 138.12. That was that sort of first bounce off of the post, FOMC minutes. Maybe we'll test that. I want to see these old highs get retested, on the real short-term charts before I start to get too aggressive one way or the other right now. What else? Jobless claims tomorrow. It's going to be real interesting. Fed didn't change a darn thing, I don't think. And the one thing they did change was their employment forecast, and I think that's the thing that the market grabbed onto. I think they sort of are looking for more of an increase in the employment situation, like we all are, I guess, at this point. And if we do get that, great. Maybe, we're getting back in a more normal environment here. Let's hope. Fingers are crossed. We can get the Fed out of the markets, and maybe we can get back to trading the way the markets are supposed to trade, based on fundamentals, and not these artificial types of things that have been going on for the last 5 years. Fingers are crossed there too. Say a prayer, light a candle, whatever. So let the dust settle a little bit here. I'm going to spend some time with the longer term charts, see what kind of levels are showing up. Again, you look at these lows that we're posting and we're not really getting healthy bounces off of them. I think that bodes for further selling. But again, I want to let the market bounce a little bit before I start getting aggressive again on any kind of a short trade here. So tonight's going to be interesting, obviously, see what happens with the rest of the world. Are they going to follow? Our equity's going to go down and bond market's going to go down, around the world, like, we've sort of led the way here. We led the way with QE, and maybe we'll lead the way with getting out of QE. So once this all clears up, things will be better, I hope. Oh, sorry about that. We're having some technical issues with the camera here. I'll be working on some charts tonight. I'll get that email out very early this morning or tomorrow morning to the subs, and hopefully we'll have a good day tomorrow. Have a great night, guys.